And now it's time for development debates. We dig deeper into some of the questions shaping the future and present of China. Today, we'll see experts debate if a tax law will stop corruption. The Foreign Account Tax Compliance Act, or FATCA, is a United States federal law that requires American citizens, including individuals who live outside the U.S., to report their financial accounts held outside of the U.S. It also requires foreign financial institutions to report their financial information about their American employees to the IRS. Congress enacted FATCA to make it more difficult for U.S. taxpayers to conceal assets held in offshore accounts and shell corporations, and thus to recoup federal tax revenues. The Wall Street Journal reported on the 28th of June, the U.S. Department of Treasury signed an agreement with the Chinese government to implement the FATCA. To comply with it, the Chinese government would provide information in an account held by American citizens to American authorities. In return, America would provide information on accounts held by Chinese residents in the U.S. Now, this is a big deal because it would involve exchanging information on big accounts from both countries, and it could be a huge factor in the corruption crackdown, especially since many of China's rich are harboring their funds abroad in the U.S. But if it will affect corruption is a hot debate. A professor at Xi'an Petroleum University, Zheng Daoning, thinks that FATCA will definitely help the anti-corruption campaign. Zheng said that monitoring the offshore account of Chinese residents has always been a problem for the Chinese government. He explained that corrupt Chinese officials and businessmen often send their children and spouses abroad in order to avoid domestic campaigns against corruption. This makes it easier to transfer their illegal incomes to foreign financial institutions to avoid censorship. He said that now the United States is going to provide Chinese citizens with account information in the U.S. to the Chinese government, and this could affect corruption. An article posted on a Chinese magazine called The Mirror, written by Cheng Chip-Bing, said that exchanging bank information with America won't help the anti-corruption campaign. Some of the relatives of the officials will no longer remain Chinese citizens when they go abroad. They can fully immigrate, so they're no longer included in the exchange. The article also said that the corruption money may be transferred to other countries like Canada, Europe, or South America. China has only signed an agreement with America, so it can only cover part or a small part of the corruption money transferred abroad. The corrupt officials may not transfer money to America anymore, just to avoid risk. The article said the way corrupt officials transfer money abroad is more subtle. They may do the money laundering through investment or trading. The money would no longer be traceable to Chinese citizens' personal assets. This kind of transfer can apparently go underneath the radar of surveillance for this agreement. The article said that disclosure of bank information doesn't mean that it can fight corruption. To prove the income is from corruption and to recover the corruption money is difficult and complex. The cost can be high and it can be time-consuming. The article said that if the Chinese government cannot get the information, then it would be very hard to charge people for their crimes. They would need to find records associated with the money involved. The article said that if China wants to fight corruption, it should build a society ruled by law with a sound system of supervision, one that would eliminate the ability for people to be corrupt. That might be a very generalized way to say that one wants to stop corruption. Corruption is something that all governments and people of power can be susceptible to. It's very likely this exchange will affect corruption in China and offshore U.S. accounts. But it might not work as well as hoped, since people just start transferring the funds to other countries.